Hey guys, so welcome to this rerun of our this month's financial transformation live session, which is all about integration and specifically integrating your finance systems. For those who joined the live on LinkedIn, you will know we had a few technical challenges, so I'm hoping you are going to enjoy this session, which is all the way through, no issues, no edits, fingers crossed, hey? So I will just quickly cover the initial piece that we covered on the live itself. For those that have been through that already, I apologise, but please stick with us. We're just getting on to the good stuff when it cut out. So one of the things, for those of you that haven't seen LinkedIn Live, haven't worked with me before, my name is Hannah Munro. I am Transformation Lead and Managing Director of ITAS. So ITAS are a financial transformation consultancy that's specialised in Sage technology. So, and the reason I started this particular, these sessions is very much because we all know, and certainly those that have done it before know that it's not just about great technology. You need to have amazing processes and people and conversations about transformation strategy alongside the implementation. So these sessions are not Sage specific. So the first thing I would say to people is that it's not Sage specific, and what I'm trying to do is share some of the coaching and frameworks that I use with our consultants with you guys. So it's great for me because I get to put down and document the frameworks that we use, but also for me it's a way we need to bring transformation into finance mainstream, and it's a way to educate those that haven't had chance. So that being said, if you want to know my personal credentials, I've been working with and implementing finance systems and processes for the last 12 years. Background in a mix of analytics, process engineering, and of course, a crash course that I got when I first started getting into finance in the accounting side of things. So I very much come at it from an outside perspective, in that I'm looking at how we get out what we need from finance. But obviously, having worked in this arena for a very long time, I'm very much on understanding the debits and credits and doing all that wonderful stuff as well. So for those of you that don't know, we also both share this session and other great conversations as part of our CFO 4.0 podcast, which is weekly conversations about everything strategic finance. So that's transformation, that's conversations with CFOs about how they've led teams, that's thought leaders in the space, bringing into just basically give us a chance to show you that you're not on your own, right? You know, there are people in the same boat, okay? And that I spoke to one of the listeners of the podcast, and they said that was one of the great things. So we're going to continue that. So if you're interested in exploring and talking and listening and learning more about finance, that's a great place to go. For those of you that enjoy this session, we've actually got 2 more sessions before the end of the year. I've got one coming up on automation, and I've got one coming up on building a 12-month transformation strategy, which will be released to the wider public in January. But if you want a sneak peek, you can join the lives in December as well. So the links and the details on that will be at the end of this session. That being said, let's get started. So I bring this slide up a lot and I talk about it a lot because people say, well, why do I even need to attend these sessions, right? So fascinating facts is that 85% of finance teams are planning a transformation project of some kind, right? The scary fact is that the stats from Gartner in 2019 showed that only 30% of financial transformation projects actually deliver results, which worries me. So there's 2 things that we need to think about. Is one, do we know what we're trying to achieve going into these? So how do we define the result? And secondly, why did they fail, right? And for me, you know, we've spent a lot of time delivering projects well, but actually when I speak to people, there's some basic things that people don't know going into these projects, and that's what we're here to talk about. So that being said, we are going to talk today about why integration generally. So why integrate? What are your options? How do you plan out and have good conversations before you start going down an integration route? And I'm going to share some basic resources that you have that might be interesting for those that want them. As always, the aim of these sessions is to educate and inform. If there are questions you have, please do message me directly on LinkedIn. My email address is splattered throughout these sessions, so please do reach out. But would welcome your feedback. And if there's enough questions, I'll do another live, or I can obviously respond to you directly. And I'm happy to do so. So don't be afraid to reach out and open up the conversation, because if you're thinking it or wondering and asking that question, it is likely that somebody else is as well. So, okay, so the traditional approach to having an integrated system kind of fell into one of two camps. So either people spent a lot of money, and I don't just mean a couple of thousand, you're talking tens or hundreds of thousands on expensive development. Some people even brought development teams in-house. Or engaged a partner, or they went down the route of buying an all-in-one ERP so they don't have to worry about it. Okay, so that historically is how finance has approached integration, right? But things have changed, and they've changed quite dramatically, right? So what has changed? So first, cloud. So cloud has given us, firstly, flexibility of systems and access to systems and technology that we would not normally have access to, especially at the small and mid-sized level. Like enterprise always has had the really fancy systems and the automation, but actually one of the things that's exciting about cloud is it brought those bigger systems more mainstream, allowed them to be deployed quicker and deployed easier and at far less cost. So it's opened up this world of what we call best of breed finance, right? Which has created, and if you think about the world today, just think about your phone, right? It's created this app-based culture. So we might all need to send a message to somebody, but it will like all of us might use a different product. So one of us might use Facebook Messenger, another person might use WhatsApp, another person might use text. Yeah, and some people might send text through Apple or Samsung, and doing it in different ways. So what we've created is this culture of people going, oh, I'm just going to download that app. I'm just going to plug this in. I'm just going to use this system to fit a gap. And it's created it, and that culture is permeating into businesses, right? So businesses go, well, why do I have to use the AP solution that sits within your system? Why can't I just plug in this amazing new piece of technology that I've discovered, right? Or I've outgrown your system. I don't want to change the core finance, but I want to upgrade this bit. So how do I do that? So, and it's created this culture of, I actually want to choose the apps and the tools that I use across the business, not just in finance, but I want to be able to bring them together. Okay, so that's where integration comes in. The nice thing about that is that actually technology is enabling us to talk more about integration. So we've got the concept of an API. Now, I will explain what an API is later, but basically, an API is a translation box that sits outside of systems. So systems are now being built with APIs as standard, right? There are varying degrees of quality of API, and we will touch on that as we go through. But fundamentally, APIs it stands for Application Programming Interface. It basically means that two systems can talk together in the same language. That's why I call it translation box. So system A can talk to, say, system B and send information from one to the other. So again, fairly new invention, I'm not sure invention is the right word, but fairly new technology. As the cloud opened up, as the web opened up, we've got these options. And next, we've spawned a whole new generation of software called integration programs. So integration is no longer, certainly for the customers we're speaking to, it's becoming more of an expectation rather than an ask, like a nice to have. So, we've got these integration platforms that come out, so systems and software that is just designed to do integration. And fundamentally, technology and transformation has become a strategic advantage for not just finance, but actually for businesses, right? So they need the flexibility to choose the tools that they work with, to be able to adapt those tools, sometimes build their own tools, but also they need those processes to integrate seamlessly, because fundamentally, the business has an expectation that finance will surface information, and not just surface it, it will surface that information quickly. That information needs to be accurate, and it needs to add value and context to the business, right? So the combination of all of these factors is driving a massive change in how we integrate and what we integrate and our expectations of integration. So let's just talk about why integrate. So the first thing is just think about speeding up your processes, right? I don't think anyone, and I say that, I don't think anyone goes into accounting or finance going, I want to type numbers into a system all day. I want to look at a piece of paper and type that purchase invoice into a system, right? We a lot of people enjoy, like there's a few people I know out there that love a good reconciliation, right? But fundamentally, data entry and getting data into systems is not exciting. It is not particularly interesting unless you're at an entry level. So it's we need to speed up those processes and reduce the administration behind finance, because the expectations of finance are changing. Finance is expected to deliver at a different level, a more strategic level. And in order to do that, we need to reduce the admin and reallocate those resources. We're also expected to produce all this amazing reporting and insight a lot faster. So, waiting 20 days, 30 days to do a month end. I had a conversation with somebody that hadn't actually managed to complete their month end before starting the next one, right? That the business's expectation is that it needs to take days, not weeks, to do a month end. And we are already starting the conversation with a lot of businesses about starting that shift to building a continuous close. And that expectation is just going to get higher and higher and faster and faster. So, integration is critical to deliver on that. Integration will reduce errors, because the more you handle data, the more touch points you have on a piece of data as it transitions from system to system, the more likelihood you will have errors. So, whether that's just misentering a product code, whether that's mistyping a customer name, there are all sorts of things that can happen. So, if you want to have clean, good data, you need to minimize the human error that comes with that. And fundamentally, it's not just about the errors that come with the data, it's about the quality of the data that you're pushing across and the range and the breadth of that data. And I think traditionally in finance, we've always been quite protective of our finance systems. I remember having lots of conversations back in the day with finance teams going, no, I don't want anyone outside of finance entering data in the system. I don't trust, this comes trust. I don't trust anyone in finance to enter data outside the system. And actually, if we start to automate, as we start to automate and we add depth and validation and rules around how people enter data, we create this, not just this improved data quality, but we reduce the difference between what finance says is happening and what sales says, for instance. So, like sales think they've generated this amount of revenue recognition. You're sitting there going, no, I don't think so. And then you spend hours reconciling what's sitting in CRM versus what's sitting in finance, only to turn up and say that somebody's made a manual entry wrong or a date wrong as they've gone through. So, actually by reducing the data silos, we reduce the need to reconcile that data. As well as the other benefits. So, having sales and finance speaking to the executive using the same numbers in the same ways is essential if you want to grow and you want to scale. And I think the last but certainly not least is about being able to share more data. As you start to automate integration, you remove the need to only share essential data, because if you've got lots of data get from one system to another, you literally minimize the amount of data you start pulling across because it's time consuming. Once you start to share data, not only sharing it quicker and in real time potentially and giving reporting out and in visibility out, but you can actually add and enhance that data. So think about customer data. So your CRM, you're storing the industry, the size of the business, which you're using for marketing purposes. But imagine pushing that data through on a customer record and then being able to pull a P&L by customer size, customer industry. Yeah. So integration is essential for you to be able to have that kind of capability, because you in finance do not have the time to maintain and monitor when somebody's changed the industry and then updating that, or change the size of the business, or change the account manager. You need to have a seamless flow of information between systems. So I think I've covered like the key bits, but I'm pretty sure there are lots more reasons to integrate. Think about risk, think about the impact of sharing information, salespeople understanding credit limits, current statuses, time to pay, all that kind of stuff. So there's loads of reasons to integrate, and it doesn't have to go one way. So the first thing to think about is what systems should you be integrating, and the priority around which systems to integrate differs according to what industry you're in. For instance, people-focused industries will really focus on payroll, HR, and maybe PSA because they need all that timesheets information. You might work in an organisation where actually payroll, whilst important, it's pretty static, it's flat, it doesn't change a lot, and it's always allocated in the same way. So it might be super easy just to do a journal and import it in. So just take this into context. But CRM is probably one of the biggies, right? Because everyone has customers, and they should have a way, I should say, to track and get that forward flow from quote to cash and cash collection, right? You want that as a seamless line. You want to speed up the time it takes you to get invoices out. You want to speed up or improve the quality of the data you're storing, and you need to report on where your revenue is coming from. So CRM is an obvious one for me personally. But talking of payments, you need to make sure that you're integrating your payment system. So are you pulling data from your payment system into your finance package? Is it standalone? Are you having to reconcile via spreadsheets? All those kind of things to think about. Expenses, normally a fairly easy one to integrate generally, right? But again, if you are doing a lot of these, or you've got some complex requirements, particularly around integration, you need to make sure you're having the right conversations, because not all integrations are created equal. You hear me say that, but it's very, very true. And so actually, if you're looking at expenses software, integration should be one of the key conversations that you have. And a lot of people talk about it afterwards. They go, does it integrate with, ERP software? A salesperson on the expense side goes, yes. And nobody thinks anything of it until they start to implement and the data starts flowing through and it's not delivering what it needs. So, can be easy, needs conversations. Billing, you might have, a lot of people do their billing inside their finance system, which is great. Other people might have a bespoke billing system or something tagged on the back of their CRM, like a lot of recruiters do. And then they need to automate that flow through. And e-commerce is an obvious one. So stock coming through, invoicing, payments, all that kind of stuff. We need a central feed. We don't want to be doing imports and spreadsheets and things. So have a think about the systems. If you haven't got a system map, that's one thing to document out. So finance system in the middle, figure out all the systems you've got around the business, put a line between them to say, right, this system integrates and this is what information we should be sharing, right? But we'll talk about how you start to build out your integration strategy in a bit. So the first thing to understand is, what are your options for integration? So I said this literally on the last slide, but I'll say it again. Not all integrations are created equal, but there is also not just one answer. So depending on your requirements, your need for flexibility, your budget, there are multiple options that you should be considering or looking at when it comes to integration. So I'm going to take you through each of the options. So first one is manual via Excel. So that does not mean typing data in. It means I have an export from one system and I'm going to import it into another. So that's the lowest level of integration that I class as an actual integration. So we'll talk about that. Point to point, also known as API to API, it basically means a direct connection between two APIs. RPA and middleware, so that is where you have a bit of software that sits in the middle and supports the integration process, and then pre-built connectors. This is where you can get quite a degree of change in pre-built connectors, and it can be quite easily confused with point to point. So we'll talk about like how I define those differences and things to consider and watch out for as you go through. So pros and cons of each type. So the first thing, Excel. Right. So, one of the good things about Excel integrations is that pretty much most systems will have an ability to allow you to export. A lot of systems will give you the ability to import. Right. And so, as long as you've got things in similar formats, that this can work as a great intro to starting to connect the dots. Right. If you are manually typing this information in, Excel is a good starting point. But it does have its fallovers. So And people say, well, why should I move away from Excel? So there's normally they, well, actually, people don't normally say that, but they normally say, God, I want to move away from Excel. And there's a couple of reasons behind it. So Excel is great for creating transactions because you export from one system, you import into another, and it creates a transaction. Where it tends to be less good as a method of integration is when you're updating information. So think about the concept of customers. Like the first time you create a customer, obviously that information's there, might be in an export, but each time you update, or your salespeople go in and they add information to CRM, billing information, etc., then you don't necessarily always have that ability to update that customer. So you need to. So for me, Excel tends to be great for creating records. There tends to be less capability to update existing. Not all systems, right? And again, this comes down to not all systems are created equal, as well as not all integrations. But it can be one of the big downsides. The second thing is that it tends to be that you need a different file for each object that you're importing or creating or updating. So if you're doing like a sales invoice, you're trying to integrate sales invoices between one system and another, you tend to have to create your customers. You need to add any new products. You need to add any fields or bits and pieces before you then import the invoices. So you can end up managing multiple points of entry, so multiple files to get data across using an Excel. Okay, so that can be challenging, and it could also be open to error. I guess on the flip side though, let's think about why this is good. So I very much see if you're going to use Excel integration, it's a great precursor to doing full-on integration because it allows you to look at the data as it comes across. You can sense check the data with, you could eyeball the data as you export it. You can eyeball the data before you import it. You can manipulate the data, so you can tweak fields, have some fancy VLOOKUPs, etc. in the background to make that data import cleaner. But again, like anything, you're hand-holding it through. Which can cause challenge. It can absorb time because it's not just coming through on its own. Somebody has to do it. If somebody's off, that's a challenge. It can also be impacted by, it could also impact how often you can pull data across, because most Excel imports, if they're being done, are done at most daily. In a lot of cases, it's just done weekly or monthly. So you're not really getting that shift into real-time data. So lots of pros and cons. There is a time and a place where this is appropriate, but you just need to make sure that it's not your end game. It's a step in the right direction. So better than manually entering, not so great as our other options. So then we get into API to API. As I said earlier, an API is an application programming interface, which is a very long word, which means it allows you to share data or triggers and conversations between systems using a common language. So when you build a finance system, you will, when people want to push data in, they're using a common language that everybody else knows, understands, and can share, right? The big thing to remember about API integrations is, they are brilliant in terms of they can be real time, they can be quite customizable and flexible if you have the skills to build that integration. So if you are going to do an API to API or a point-to-point integration, you need to think about who is going to build that integration, whose responsibility is it going to be maintain it, and how much control do I have over how it integrates. So if my processes change, is that integration going to change? Is this an integration that lots of people they're going to build just for me? Is it going to be for lots of people? So having conversations about the API integration is really, really important. And it can be, you still have to have good conversations about how you structure an integration, because, you need to figure out which objects you're going to sync, which fields you're going to sync. Okay. It can be lightning fast, right? But you very often need to have a chat with both sides of the piece to say, well, how are you going to share information back and forth? Because that's one of the nice advantages that it gives. It can share information between two systems. So it's not just one way. Excel imports and manually integration via Excel tends to be very one directional, whereas an API can be bi-directional. You can choose, you can trigger in real time as something changes, you can push it across. So it's certainly the way a lot of people want to go, but you do need to make sure that you understand how you are going to maintain those skills. You need to make sure you have the right skills either in-house or with a partner. And you need to think about, what if I change something? So if I add a field onto my custom field into my ERP, how am I going to get that across? You're likely going to have to put money towards editing it and changing that code, because you need, whoever's changing the integration needs to change the underlying code that it is built in. So there's some massive advantages to shift into an API model, but you just need to think about maintenance flexibility and what that means. Now, the next option on the table is middleware. So this is where you start to get a bit more flexibility. So middleware, there's a couple of names for it. RPA is one name, which is robotic process automation tools. The other way you can say integration software. There's a couple of different names, but basically it's a kit that sits in between the two pieces of software. It tends to have pre-built connectors to one of the APIs, hopefully with some nice easy sort of connections to say, right, and they tend to have, like, think of it like process maps, ways you can sort of almost build your own integration. So drag this here, drag that there, etc. So so there's lots of reasons to use middleware, right? One, it can be used for more than just integration. So clues in the name, RPA, robotic process automation. You can do triggers and alerts and all sorts of things with it. You can often use a non-development level resource. So it's designed to be used for an IT person, administrator, consultant level person. I wouldn't give, everyday finance person access to that middleware unless they were particularly technically competent. But you have that capability. And very often there will be multiple partners that you can use to support that integration. It might be, it can take some time to pick up how something's been built out, but it's a lot easier than unpicking somebody's code, which can be a challenge. The other thing that middleware does better is that it can allow a bit more transformation. So when we go API to API, we tend not to do a lot of transforming of data, so looking things up and doing things, right? Because the more complex we make that process, the more code, the more that needs to be maintained, etc. Middleware can have an ability to do more manipulation of data as it shifts between systems. So it can look something up from a spreadsheet or from another database, for instance, and change that data mid-flow before it pushes into the next system. So it's really good for additional validation, or where you have data sets from one system that doesn't quite work well. It's also really good when you have lots of systems that may not actually have an APIs, or the APIs may not be very strong. Because one of the challenges of the API is that it's great if the objects are available, but sometimes the objects aren't. So there needs to be especially older systems, they tend to want to integrate in different ways, like FTP or directly into SQL or Oracle databases and stuff, right? I don't personally recommend that. If you can avoid doing that, that's ideal, because APIs have embedded validation rules that sit on top, like a validation layer that's worked through as you push data through. But middleware can give you access to systems that you would alternatively not be able to get access to if they haven't got an API as well. So there are some definite pros to having a middleware. I guess the cons is that whilst it doesn't require a developer, it does require a technical resource of some kind, right? So either that's a partner like ourselves, or it's a internal administrator, or somebody that can actually build the integration. It's a bit like APIs. There doesn't tend to be a huge amount out of the box. There'll be some sort of standard workflows that you can get and pull down, but very often people, part of the reason people want middleware is they want the flexibility to build their own integrations and to use things in a certain way. So that's something in. The other thing to bear in mind is that there is these systems that sit in the middle have a cost associated, and both in terms of implementation, so setting up the integration just like you would with a point-to-point, potentially maintaining if you want to change something between systems, but also for the software itself. So you might be paying an additional cost on top of your existing system infrastructure. So you need to weigh up the value of that and how often you think you'll be changing and tweaking. I'm going to be honest to say adding a single field into a middleware is a lot easier than rewriting code in most instances. But again, it does require time. So if you have good capabilities around the middleware, it can be a really great strategy to look at. But the flexibility comes at a cost. So you just need to weigh up what you want and need. The other option on the table, and it's one people don't think about that often, is the concept of a connector. So for me, a connector is over and above a standard API integration in that it will often have things like screen pops, etc. within the system. It will allow you to look at data from one system to another. So it will do more than just send information over. It tends to allow some kind of embedded integration, right? They are pre-built. There are some systems that come with them. They are pre-built. But the piece, I guess the pros is that one, they tend to be more cost effective because it's already built, it's out of the box, it's quick to deploy. It tends to have, certainly the good ones tend to have a certain depth of functionality, which is fabulous. But I guess the piece that it does give you is a requirement to use what is normally termed best practice, because the connector will have connection points of some sort, right? It'll be designed to be used in a certain way. So if you fall outside of the remit and the way that integration works, then it may not be a suitable solution. So if you want to do, maybe Salesforce, you've built your own custom objects, you want to do some specific bespoke integration between that and your finance system, it is unlikely you will find a connector to do that. You're best off looking at the either direct API option or the middleware. So those give you the ultimate level of flexibility, but what connectors do is tend to give you bang for buck, and they tend to speed up connection implementation, and they tend to be less hassle to maintain generally because they're being maintained by whoever's produced that connector. So, and their other thing, I guess, just to bear in mind is there can be a cost associated with a connector. So it may have its own subscription. So, okay. So once you've figured out, now you know the different options that you have when it comes to integration, it's then start to step back and start to build out your integration strategy. So the first thing is what I talked to you about earlier. So map out your integration points. If you want a tool, I tend to use Lucid. It's one of my favorites for all sorts of process mapping, but you can basically put, logo of each software, and I can share some examples if people would like them. And in fact, I might do. I should have put one on the slide, but basically, map out your integration. So what systems do you have around the business that you might want to integrate? So the next thing is then to think about what data do you share between those systems. So for instance, CRM, you might share customers between CRM and finance. Yeah. So that's figuring out what are the common objects that sit in both systems. The next thing to understand is what is the volume of data passing through? Because we've all got a finite set of money, we've all got a finite set of time. We need to prioritize how we integrate. So the first question is, how much data are we actually sharing and is common between? So thinking customers, how often do we get new customers? What is the volume of data that's coming through? How often, how many invoices are we processing, etc. Because again, it's just will help you put into context what is the right solution. Yeah, because if you're doing, 250,000 transactions a day, you're not going to be able to, that is it's not a good strategy to have that coming through via an Excel import. Firstly, because I'm not sure Excel will like that volume. But secondly, the data and the validation that comes with that is challenging. So understanding volumes that are coming through, and if there's any peak periods, etc., is really handy to understand, and will help you figure out what is the best choice. map out data sets. So what I mean by this is you need to understand the detail that sits within an object. So classic example is fields, right? And I keep going back to customers because it's a really good example, but understanding the data that sits in each system and what data should be shared or could be shared, right? And I'll talk to you about how you define and think about that. So for instance, what fields should be shared, what fields sit in both systems, etc. And if you think about those integration points, so say we want to integrate, say, invoices from one system to another, we need to think about the data dependencies. What data do you need to come through to allow an invoice to be created? You need the billing contact, you need the customer, you might need the stock item. So you need to think about the dependencies for each part of your integration, all of those integration points, and that will expand out both your data sets and your volumes, etc. Okay, so this will grow legs, right? Once you start to look at each of these components of your data strategy, you'll start to build out. But that's good, right? Because you've got your base layer, which is here are my objects these are my systems that I integrate. These are the objects I share within those. This is the volume of data, so I can think, all right, where do I want to focus? And then you start to get into, right, well, these are the data sets that sit in each of these. These are the detail of what sits, and then this is what I have to share to get this data from one system to another. But then, so once you've got like those data sets, a lot of what you've looked at will be based on best case, right? And again, where integrations fall over is that people haven't thought enough about the what ifs. So the first part of your what ifs are what scenarios do you have? So, so an example could be if you're sharing purchasing, what about your overhead invoices versus your your direct cost invoices? Do you treat those differently, your purchase invoices? Do they have different approval routings, etc.? So, thinking about your scenarios around integration points, you then need to think about what are the controls and validations that you need to have in place. So classic example, purchasing, you might have products on your purchase invoice or, PO, etc. So if that's in case, does that PO exist within that system? Yeah. Does that product have a nominal, for instance? Does that line on that purchase invoice have a department? So thinking about the validations that you need to have, because there is absolutely no point putting rubbish data into your finance system because you will get rubbish out. Yeah, so you need to think about the controls and validations. Sit around it. And then you need to think, and this is one of the hard ones, is that it's sometimes easier to do this at the beginning, to think about the reporting requirements, but very often once you start to see a shared data set, it's easier to think about reporting outside. So this one could be at the beginning of the process, but it also could be at the end. You need to think about your reporting requirements from a shared data set. So if I'm looking, again, I'll go back to this example of a P&L. So how do I want to analyze my P&L, my finance data? Do I want to understand departmental costs by FTE, right? So the average cost, what does it cost me to run and have an individual in that department? And then you start thinking, well, I need the FTEs coming across per department. So where does that data sit? That sits in HR. Right, I need to pull that across. I want to pull my P&L by product, right? So, but on that product, I want to know who supplies that product. So the brand that product works in, that information sits in my procurement software. Oh, I need to share that. Yep. So there's lots of things that you need to think about, from all aspects. So when I'm looking at my finance data, what do I want to analyze it by? And if you haven't spent time understanding your finance reporting requirements before you start building out your integration strategy, I would set that. And actually, I might pencil that in as a session to run potentially in the new year, because reporting requirements is normally the thing that people think about after, when it's a problem, rather than thinking about it at the beginning of a process. So when I'm looking at integration strategy, when I'm looking at transformation, when I'm looking at system implementation, the first question I'll always ask people is, What do you want out? What is the end goal? What do you want to be able to present to your board, your executive, department heads, your stakeholders? So please don't underestimate that. And if you haven't thought about it, and if your organization hasn't thought about it, how do they want to use the data that they're starting to collect, then it's well worth doing. Because especially if you're going for things like API, where you're having to pay for somebody to build something, you want to make sure you've got all of the data crossover points that you need. You need to think about direction. So what I mean by direction is in what direction is data going? So is it going one way? So are we taking customers from CRM and pushing them into finance, and there's no backwards, so if finance updates the address that sits on the customer, they're going to push it back. So thinking about direction is really, really important. What is going to create that transaction? What if I update it in both systems? How is it going to work? And of course, you need to decide on how you then are going to integrate. So once you've looked at all of these things, you can then decide on how you're going to integrate. So let's work through all those points, use an example, right? And I'm going to use the example of an invoice coming through from an e-commerce system, right? Talked a lot about CRM, so mapping out my integration points. So I might have, if I think about that piece, I'm going to have my finance system, I'm going to have, which happens to have a stock management system in. I'm going to have my payment system, and I'm going to have my e-commerce system. Okay. So the volumes, I'm going to understand how many invoices I'm selling through, how many customers. I'm going to map out the data sets. So I might think of, at the moment, I might need a customer. I'm going to make sure that I've got currency on because I do a lot of foreign currency transactions. I know I've got product. I want to be able to analyze by item. I want to be able to push that data across. So in order to do that, I'm going to need my customers coming across, and actually, I'm going to think about, do I want one customer? Do I want that everything goes under? Do I want to pull across all the customer information? Yeah, so question. I'm going to go back to our reporting requirements. I am going to need to share products between them too. So before I can sync across my products, I need to share them between both systems. And then when I start to dig into the detail of the products, I realize that what the commerce system calls a product is not the same as what I call a product in finance. So in the web commerce or the e-commerce site, I've got a different product code per combination of color and size. I've got a single product code in my finance system. So my first question is those data fields, those data sets don't match, right? So I need to start digging into them. So I'm thinking customers, products, and line of business, and I'm thinking invoices, okay? And then I might say, oh, okay, but I'm not just thinking invoices. What if there's a credit note on the customer account? The customer needs to see that information. Question. So then I'm thinking about scenarios. So I'm thinking about, right, I've got as part of my website, I've got my B2C section, which is going direct to customer, but I've also got a partner or channel section where people can just go in and place their own orders if they're a nominated customer. So, and I've got different scenarios around those different orders, and they might come through. Different products might have different delivery processes. So one might, I might have a pro forma process where we have to make sure payment's cleared before we dispatched. We might have an order and then payment on delivery for my channel customers. So I need to think about the scenarios that sit around that. And I might have some items that are dispatched direct from my warehouse. I might have created a lovely back-to-back order shipping system that pushes that across. So, there's lots of scenarios that I've then documented out. And then I think about controls, right? So for me, controls are, I can't place an order if it's not in stock. So I need to make sure I'm sharing stock information between two systems. I need to make sure that I've understood that I've got, before my invoice pushes through, that I've got tax information, because that'll define how I push it through. Lots of people won't give us the right country, etc., and I need that mapping. I need to make sure that the products have been set up. right? And that combination of color, code, etc. does exist. So I need to make sure I've got some controls. Again, from a reporting perspective, like I've thought about what I want to analyze. So I want to analyze my my profitability from my channel customers versus my non-channel. Okay, so that's the first thing. So I definitely need a distinction. And within my channel, I want to understand the difference of, channel customers that are distributors versus those are wholesalers versus those that maybe I've got some delicatessens or shops, etc. So I want to split those out. So I need to share the type of, channel partner that they are, and I need to have that information shared across. I want to understand the profitability of certain products depending on the brand, for instance. So I need to make sure my products are syncing across with brand. And you can see how it starts to build up, right? So once you start to dig into this, you go, ooh, interesting, okay? And direction, right? So I know that products need to exist in both systems, but I'm going to decide that my finance system is going to be the master. So they have to create the product, and all changes to the product happen in the finance system, and then that pushes through. Yeah, you can decide to go the other way, right? But you've got to make sure you've got fields for nominal codes and all those kind of things before they push across. And I think for this scenario, for me, because the issue with the product mapping and the fact we need to do some transforming in between, I'm actually going to go for a middleware integration, right? So you can pro and con it out, of course. I personally would maybe look at 2 different options, but I'm going to do that. And maybe I'm going to start with just doing an export and import of data just to understand how things map across. Okay. So lots of questions to ask yourself before you start thinking about integration. And I think maybe a future session is actually, if you guys want it, if it's useful, I can take you through examples of how to map this out in more detail, right? Because very much I'm giving you now the questions you need to ask, but what are some examples of the documentation that sits alongside this, and how do we do it? Okay, so moving past our example, some top tips, right? Because it can be quite scary building integrations. People can think it's easy, and it really, really isn't. It sounds wonderfully easy, but it isn't. And the devil is in the detail. Okay, so when you're planning an implementation strategy, figure out how you can break it into smaller, more manageable chunks, right? So if you think about the example of the website that we looked at, how can I sync that across? So the first thing could just be I'm sharing products between the 2 systems, right? That could just be my first point of call, so that finance people don't have to create a product every time, sales are adding it and they're adding them at a rate or not. So that could be my first piece. If I'm doing a CRM integration, I could just sync customer information at this stage and then just do the imports, continue in my Excel option. And Excel is an entry point, right? I say it should never be an end goal, but it can still be an entry point. It can be a good way to get data out of one system, look at it and import it in and see where there are issues with data. So it just depends on how bad the data is between 2 systems and how flexible the output and import formats are for both systems and the volumes and things like that. So it could be that you start with an entry point. And once you think you've got your chunks of integration, see if you can chunk it down even more, right? Because the more agile you are with that, with this whole process, the easier it becomes. Yes, you might need to go back and think, you can think about the integration as a whole, and you should definitely ask all those questions that I looked at before you start. But sometimes just having some integration can be a big, big impact. Do work through specific examples and then actually go back and recheck. So ask for the scenarios, then give examples of exports and data, and actually look through how that data should go through and how the outputs are, because it's really interesting once you start to try and match 2 systems together and look at the records in both systems where you will find discrepancies and differences. So make sure that is a part of your requirement and your testing piece. If it's not requirement gathering, make sure it's definitely which if it should be part of your requirement gathering, you should work through an example in both sides. And then obviously you need to have the testing. So testing data quality, I talked about via imports. I do use imports very often as a quality check, before I start automating. Like, have I got the flow right? Does the data reflect rightly in both systems? But it does depend on the amount that, like we talk about data dependencies, the amount that sits in there. And please, 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 before you go in as part of your requirements gathering, make sure you've built out your test scenarios. Okay, so if you know you've got 5 or 6 different scenarios, you've gone through 5 or 6 different requirements and examples of data, make sure you then test those examples of data as you go through, and any others that you might come off, and then build a whole new set. If you can test like a section of data versus just examples, that's also value. So a month's worth of orders, push them through, see how they come through, watch for the validations, and handhold your integration through. So start pushing data through, check everything really heavily at the beginning when you go live, and then start to get lighter and lighter as things should get cleaner and cleaner. And really do check and think about validations and controls, because that can be where things go wrong. And the other thing, and I think you've got loads of top tips having done as well, just think about how you're going to handle errors. What is the process going to be? So firstly, for who do the errors go to? Who's going to troubleshoot it? And then what is your process for correcting and stopping the error from happening again? And sometimes it can be meaning having a hard conversation with the sales team about how they're entering opportunities and how they're entering customer information, or putting some validation rules in place at certain stages of the opportunity is another way around it. Okay, so last but not least, my top tips, and I can't believe it's almost an hour through already. So if you are going out and buying new systems and new applications, discuss integration in detail before you purchase, right? It's people, especially I find non-technical people have a different view of what integration is. Some people will say integration is I can produce and export in a format that I can import on my other system, and that may not be your expectation of integration. So before you purchase any new apps or applications, understand the integration. If they say, oh, it's fine, we'll build an integration, get costs, get a scope, get them to tell you how they are going to build that integration. Yep, because the devil is in the detail when it comes to integration. And I see, a lot of things not quite go to plan because people haven't asked enough questions or expectations are different. And do remember, obviously you've got a lot more input at the beginning and a lot more control over conversations if you have these up front, from a cost and a pricing perspective. Understand how things integrate, right? So is it a connector? Is it a third piece of software? So a lot of people will disguise integration as, well, we have a piece of middleware that we can build an integration with, right? And that's not necessarily a bad thing, as long as you know what you're getting into. Ask the question about what happens when I upgrade. What does that mean for my integration? Do I need to have a test environment permanently in place? Like a sandbox? If so, is that part of my costings? All those kind of things. So do you think about upgrades? Because certainly as you get towards more of an app-based culture, a lot of them are doing automatic upgrades. So you need to make sure that if you are going to do like API to API connections, what is the protocol around those? What happens if a upgrade throws something out? How do you troubleshoot? How do you report it? What's the timescale for resolution? And generally, certainly in this day and age, I focus on flexibility and agility. Like if I have the choice, right, of course cost has to come into it, but flexibility and agility and the ability for me to change is really, really important. That doesn't mean that I'm going to go straight for API, right? Because whilst I can change it, the cost and the effort required to change it can be prohibitive. So that is as much a part of me assessing how flexible and agile I can be with that platform as it would be using a middleware or a connector. So a connector, some of them have the ability for you to map fields in, for change the objects that you're syncing, for instance, right? So do think about what happens when our systems change, when systems upgrade, when my requirements change. What if I need to change? How am I going to do that? And what is this holding me to? And make sure, and I put this in again, right? We talked about it. Just make sure you understand your reporting requirements. Think about your expenses. If you want to analyze how much you're spending with Uber versus Lyft, or you're using that to do carbon emission calculations, you need to have that data, right, in the system and being shared across from system to system. So do think about your reporting requirements before integrating. And please don't assume, and my last and final tip, do not assume that integration is a one-hit wonder. It very rarely is, because not just your systems will change and tweak, but your needs as a business are likely to change and tweak. So you need to think about how you are going to budget for that. It might be there's a certain element of that included as part of your piece. If it's not, ask the question. It might be that you have the ability to amend and adjust how you're integrating, and then it's flexible to change. So lots of things for you to think about, and hoping this has been helpful. So today we've covered why integrate. We've talked about the options you have for integration. We've talked about the steps going through and planning out your integration strategy. And if anyone is interested, I could probably dig more into that in a bit more detail if it's of interest and value. And then useful templates and resources. So my offer for anyone that wants it is that if you want to email me, my email address is there, DM me on LinkedIn. I'm happy to take follow-up questions, and you never know, if you're thinking it probably means someone else will, or I might get enough questions to start a whole another transformation live, which would be lovely. I'd much rather answer your questions. If you've got particularly interesting or difficult scenarios, send them through, right? I don't promise to have all the answers, but I tend to either know where to look or can give you some direction, right? So you never know, we might be able to help, but my first option is to try and give you the tools that you need to go away and figure it out. If anyone has some integration challenges or wants some help thinking about a data strategy, I'd be interested in offering an integration review session, as long as we can use it for one of these LinkedIn lives or my podcast, etc. And it will be a top level discussion of how you integrate, pros and cons, and given some guidance. But the idea is that we can share that out and enable and support others as part of this. So in terms of upcoming sessions, we've got a session on how to approach automating your finance processes. I think this might end up being the first in a series, a bit like this integration piece, but hoping it will give you a framework for how you think about automation, right? Because it is not easy as just buying a nice piece of kit. You really need to take a step back and think about your strategy around it. So we're going to do a session on how to approach automating your finance process, kind of the precursor. We're then coming to Christmas. You've got to love my wonderful marketing ladies have designed me a beautiful PowerPoint, the December session. So we do release our financial transformation lives on the podcast and on YouTube. But we won't be releasing the December one till January. So if you want to get a sneak peek and get ahead, you can join our session just before Christmas, in the middle of December on the 15th. And we're actually going to build out your 12-month transformation plan. Based on the technical challenges we had today, we are evaluating what platforms we use to actually deliver these sessions. So if you haven't already and you want to get alerts to these sessions, please follow us on LinkedIn, because you obviously get those alerts, or follow me. Between the two of us, we should get you sorted. So if you look for ITAS Solutions or ITAS Sage, you'll find us on LinkedIn. Or myself, Hannah Munro, you can find me on LinkedIn. It's me sitting on a yellow chair for anyone that wants to see the profile picture. But also go onto our website, www.itassolutions.co.uk, and you can actually sign up to receive email alerts. We've got loads of great content on other things, but fundamentally we're trying to be very careful about what we send to people and when. So you can just go on and get just these transformation live sessions or podcast alerts. And we also have our CFO newsletter. So that is also worth signing up to. You can sign up to it on LinkedIn. You can sign up to it on our website. And that will allow you to then we publish all these sessions on that newsletter as well. That goes in directly into your inbox. So for those of you that haven't that may not be aware, like integration should be one part of a transformation strategy. But if you're, just starting your transformation journey, be well worth having a look at the one of our previous episodes. If you're looking to map out your integrations and your processes, download a guide. Like I literally spent months building that one out, so it's fairly hefty, but it is useful. I think it's even been referenced in one of the university's text guidelines for further reading, which I think says a lot about maybe how much content I've got in that guide, and I might need to chop it down. And then if you are looking for a platform that you can integrate with, so for those of you that know, we do specialize in Sage Intacct. It's got cracking API. It's one of the things I love about it. But we do have a session that we did a couple of months back on automating processes, and it has a bit about integration in there as well. So thank you so much for joining us. Thank you to those of you that came back and watched after we had some technical challenges this morning. Very much appreciated. Any feedback, good or bad, constructive criticism is always welcome. Please do email me. The website's here. Pick up the phone and have a conversation if you feel like we can help. But I hope this has added value. I hope you learned something, got something out of it. Maybe I just made you think, right? And then I've done my job. So thank you so much. Hopefully we'll see you at the next one. If you enjoyed this session, please like, subscribe, and share, even more importantly, or leave us a review on the podcast as well. It's always appreciated, particularly if you found it helpful. So take care, guys. Hopefully see you at the next one.